It's like Hey folks, how you doing? Looks like we're going to get started here in just a second with a brand new stream for you. Happy New Year to each and every one of you. My name's Keith Allen from Material Indicators. Been oh, I got a little echo coming from my YouTube channel there. Let me squelch that out for you. Anyways, Happy New Year to everybody. My name's Keith Allen from Material Indicators. Today we are going to climb in to some of our tools and do some low time frame and high time frame analysis of Bitcoin and ETH, and maybe if we have time, we'll check out a couple of other alts. But really, obviously, a lot of dramatic movement in the market here this week. Possibly the catalyst was the hawkish tone of the Fed minutes the other day. It's obviously impacted legacy, traditional markets as well, and we kind of see a correlation here. So we're going to climb in, utilize some of our tools and see if we can make sense of what's going on here. Before we do that, I want to give a quick shout out to all of our new members and subscribers in our Telegram channel, on our Twitter channel, and of course our premium VIP channel. A lot of new members joined us over the holidays. We're very appreciative. We appreciate the support. Hope you are figuring out the tools. And today, as we do this analysis, I'm going to show you some of the nuances of some of these tools to help you get a better understanding of how you might use them to your advantage as we go. If you're not yet a member of our community of global traders, I invite you to join us on Telegram and Twitter, of course, but Telegram is really where it happens. Here's the link right here. If you can't copy that down, then you can get it off of our profile in Twitter. Of course, if you like the content that we share here, I hope that you will like, comment, and subscribe. And before we get started, I definitely, got to touch on the fact that none of this is financial advice. I'm not a financial advisor. Material Indicators does not provide financial advice of any way, shape, or form. Trading is risky. Please never, ever, ever risk more than you can afford to lose. There's some important decisions to be made here, so you may want to seek the advice of a licensed financial advisor. So let's just go ahead and jump into it. And, when we're done, I'll give you a run through and show you where you can find some of these tools on our website at materialindicators.com, which incidentally is getting a facelift. And you're going to see a very new look, hopefully here next week. So just a sneak preview of what things are going to look like, our new branding, all that coming up. But let's not waste any more time. Let's just get right into what's going on here. If you have questions along the way, feel free to comment in the chat. And if I should miss them, don't worry, I'll circle back periodically. And of course, I'll be in the Telegram chat. I'm there pretty much every day and night, so I can engage with you there, and I look forward to doing so. So first and foremost, let's just climb in and see what our chart is looking like right now. So let me go to a shared screen and pull up a Bitcoin chart, and we'll start there, and then we'll just kind of progress through all of this the best that we can. Bear with me though, because it's been a while since I've done one of these, and I want to make sure I'm doing it right. Okay, so let's go with here we go. Oh, there's our options flow chart. We'll get to that, and that's in the new MI dashboard, by the way. We'll get to that throughout the analysis here. But the first thing I want to show you is just straight up Bitcoin chart. There we go. Looks like we're good to go here. So, and pardon all the stuff on the chart here. This is kind of like my long range chart. I've got all my stuff on here, and you're going to understand why here in a minute. Let me just expand this chart first and explain the structure that we seem to have lost. And I'll even clean it up and take out the trend precognition signals here for just a moment, and we'll climb back into those here. So with any tools that you're using, I think it's really important to take everything in context and validate with other things. Okay, and so this is the market structure that I've been looking at. We've been in a bit of this turned out to be kind of a distribution phase here. Obviously, we dumped. This is when we were up around 65,000. We dumped. We tested this support here on this trend line, which basically comes from where we broke out from 20,000, and this is our trend line from the all-time high here range, where we seem to be in another distribution phase. So this literally came to a head on December 31st, January 1st, and I extended the structure here because I really at the time didn't have time to see what was going on, but just kind of extended the structure and was watching it here for a few days. And of course, we recently broke through the structure and started revisiting these boxes here. These ranges are areas of prior consolidation that seem to be significant, either prior consolidation or prior resistance and support flips that seem significant. And as you can see, we're actually testing those structures as we speak. Where do we go from here? Well, if this one doesn't hold, then chances are, we're taking a further dip. And I'll explain what some of those might be here in a moment. This purple line here is the 200-day moving average, and it's one that I follow pretty closely. In fact, let me turn on a couple of them so we can see how the moving averages kind of came into play, not just on this trend, but on the prior loss of structure. Okay, this was our first run to the new all-time high after we broke 20K, and we made it all the way up to 65 grand. Okay, what many of us noticed, and admittedly, I drank the Kool-Aid on the narrative, and I was foolishly not really following some of my typical rules, which will not happen again, by the way. But we lost at this point. We had lost the 50-day moving average. We lost the 100-day moving average. We lost the 200-day moving average, and that really was some key technical levels that I always like to respect. This 200-day moving average, just historically, it's really been kind of a make or break thing for the Bitcoin trend. Secondary to that, maybe not secondary, but kind of a final validation next to that, or confirmation, would be the 21 weekly moving average. And if I can get that to show up on my chart, let's see where we are. I'm probably way out of whack. Okay, so looking at that same time frame, we had also lost the 21, and that was really the last straw. So here we are again. We lost the 21 weeks ago. It's hidden right there. Let me move this out and we can see where that is. We lost the 21 at the end of November, and we retested it. We retested it week after week. We retested it, and up until really this week, we were wedged between the 200-day moving average and the 20. Actually, we were wedged between the trend because we had lost the 200-day moving average. We were wedged between this trend line and trying to reclaim the 200-day moving average, and the ceiling seemed to be the 20, or I like to use the 21-week moving average, which still is kind of a nemesis for us right now. So now I want to introduce some other tools that may help you understand what the trend is doing and give you clues in the future of what you can be looking for. And I'm going to start here with our trend precognition algo, and the arrows here is the A2 plus algo. It is a bit of a lagging indicator in that signals don't print, and this is a limitation of TradingView. Signals don't print until the adjacent candle prints. So this signal flashed and it was here, but it didn't actually print until this candle closed. Now, in this instance, that left us enough time to still capitalize on that signal. So here we go with another move. This signal has not printed just yet. This signal will not print until this candle closes. However, this move has already been validated. By the time this candle closes, will this have already bounced? Well, that remains to be seen. But let's take it a little bit further. And this algo really excels on daily, anything above daily, right, is the default. Now you can use it on intraday, but for what we're doing, we're going to look at, if you're going to use it on intraday, you need to adjust the settings, and that's available in another video. Today we're looking, at the moment anyways, daily. You see we lost it here, and we lost it just before the trend, just before we lost the trend line. And perhaps more importantly, we did print a short on the monthly. When we closed December, we got a print here at the all-time high that this is indeed signaling a downtrend. So how can you tell the strength of these signals? Well, there's two telltale signs. The length of the arrow, the length of the tail, determines the strength of the signal, or indicates the strength of the signal, I should say. That doesn't necessarily mean the move is going to be bigger than this move. It just means that the probability of this signal being accurate are higher. Another place we can see that, and I'm going to now go back to my other screen, right down here. This is also the A2 plus algo. And this is the on chart version up here. This is off chart. And you can see here where the signals are. And if we put our indicator data on, we can see this is a very high probability, 81.27%, as you see those values over here. So that's a very solid signal. Now let's look at this indicator right here. This is also trend precognition, and this is the A1 algo. And the difference between the A1 and the A2 is the A1 is more of a predictive indicator. And the reason why is this line that I have yellow right now. Default is actually black, I think, but on a dark chart, I like the contrast. So I changed the color, and you can learn how to customize those in another video you can see on our channel. Green dots signal the long, red dots signal the short. And when we have confluence between an A1 and an A2 signal, that's when they really seem to be their strongest. Now, the predictive part that I mentioned is this slope line here. If I went to and it's going to throw, I'll turn this off for the moment because it's going to throw a zillion signals. But if I went to a shorter time frame, you could see this, and let me expand it and make it easier to see. You can see this line actually start to move. Now it's indicating right now that, and there you just saw it tick a little bit. It's indicating right now that we're trending up. Now this is very micro. I'm looking at a 1 minute chart here. Okay, it's indicating that we're trending up in this particular instance. It won't paint a signal until it crosses this midline in either direction, right? So we can use this in any time frame. Let's look at it in 15 minutes. So the 1 minute said we're going up, the 15 says we're going down, and you see where it printed a signal when it crossed this midline right here. 1 hour. The 1 hour says we're going up. It printed so again, this would be something that scalpers and range traders might be looking at. But if you're in this for the long term, this is obviously rather micro. But when you're trying to make a decision of whether you want to pull the trigger on a trade, whether it's a DCA, whether you're opening a position, this can be a helpful tool to help validate your moves. 4-hour looks like it's trending upward. Daily, however, trending downward still. Weekly, trending downward still. Monthly, trending downward still. And this is active, live, real time. This thing moves, so it could change course at any moment. So now I'm going to take you back to the screen here where we can see that. This is my RSI up here. You guys are all probably pretty familiar with that. And let me clean this up again. So before I go any further, let me just check really quick and see if we have any questions. I see we got a few people in here, and I thank you guys for joining us. And we're going to continue through this, and now climb into FireCharts and see what we can see there. See if we see any confluence between what we saw in these moving averages, and I'm just going to put the 200-day back up, because that's the one that's really in play for me at this point. 200-day is at like what 48, just over 48K at the moment, and our TA shows us that we have some prior levels around, right here. This range is just shy of 40. We broke out from like 39.5 several months ago. So in this say 39 to 41 range that we're in right now, I will say that we've had a tendency to overshoot a lot of these things to maybe try and squeeze some leverage traders. So I'm always anticipating that, but we see volume was increasing on these sales, but we never really got, what we didn't have was great volume on this move up, right? So that's always something that I watch as well, to see what kind of volume we have coming into play when we're hitting all-time high. Look, we were hitting all-time highs, but volume was declining here. So that's always something to consider. Now, let's climb into FireCharts and see what that looks like. Let me just get a refresh here, and I like to start out on a longer term chart. If you're new to FireCharts, this is our heat map. This is our version 2, by the way, which is coming out pretty soon. We have a full community using these charts. Our 1.0 version only has 1 day of order book history, whereas our new 2.0 version, which is still in beta, and our premium subscribers have access to this one right now, and the entire MI dashboard, by the way. So this will be coming out, but if you wanted access to this now, it's premium only, VIP only, I should say. So this is a really cool feature right here. This volume percentile slider up top here allows us to adjust the volume percentile so we can see moves a little bit better. I don't like to push it too far, rather, because I want to see the nuances in the chart. But note, and a lot of people overlook this, you can also slide from the bottom and filter out the lower liquidity and really just isolate what is significant in the book. So I think that's really cool. And by doing so, you can see we're stacked here with about 38 million in the 40,000 range. We've got another 30 million just over that, and we have about 21 million of resistance right above us at 43,000. I'm going to pull this back down so I can see those nuances that we talked about. So let's go to a year and get a better feel, right? This is kind of like giving us a highlight of really where the bottoms and the tops were. And I'm going to go, actually, we don't have 3 years of order book data on at this resolution on Bitcoin yet, but we are aggregating that. We have over a year. We have about 13 months. And we have on alts, we do have 3 years for alts that have been around for that long. So the first thing I want to do is enlarge this. And you can do that by doing this, but that's a little cumbersome. What I like to do instead, it's much faster and easier, is just grab this zoom magnifier, highlight the area I want to expand, and fill the chart. Boom. Okay. So this was the breakout from 20K right here on the far left side. You can see we had, $100 million worth of resistance right there. And we mark the tops really with liquidity, just as we mark the bottoms with liquidity. Okay. You can see on the tag tool, you can see just by hovering over these areas what is happening here. Now let's scroll down a little bit and look at this bind CVD as well, and see if we can make sense of what actually happened. On the CVD, you can see this is bind. Brown is mega whales, $1 million to $10 million orders. Purple is whales, $100,000 to $1 million orders. And through the history of Bitcoin, at least since we've been tracking it, the purple whales have really dominated the price action the most. And we can, these yellow ones, we kind of feel like those are, sure, there's retail in there, but it's probably mostly dominated by bots, and it often counter trades the trend. Blue is the cumulative, the total CVD, and you can see it's really been declining through the year, certainly through this area of distribution. So let me click out some of the other noise here and make it easier to determine just what the whales and mega whales have been doing. Both were accumulating. Both were accumulating early on off the breakout from 20K, and the purple whales, as you can see, started to distribute. They started to distribute here. They bought the dip, and then we started peaking. So this was really the beginning of the distribution phase here at 57K. They dipped, they bought the dip. And these could have been exit pumps at this point, right? Distributed, dipped, exit pump, dipped, exit pump, and it dumped from here. Now, the brown whales bought the whole way, bought all the way through the top. So you're saying, why would the brown ones buy the whole way and the purple ones be selling? Well, one thing you need to understand is that brown whales, mega whales being the largest class, can disguise themselves as any other class, right? A retail trader can't disguise themselves as a whale. We don't have the capital to do that. However, brown could disguise themselves as purple, so they could be buying brown to try and signal to bots and to other traders that, hey, the big boys are buying. But they can also, whether it's simply through split TPs or just as a means of hiding what they're doing, be selling through smaller classes, whether it's purple or red or green or whatever. They can be distributing through smaller orders, and they certainly did. So ever since this real distribution phase, the purple class has really been heavy in selling, and it's my opinion, and this is a bit speculative because there's no way to prove it 100%, that a lot of this selling down here. Let me turn off this tool so it's easier to see. It's been my opinion that much of this selling down here of purple has been these brown whales offloading as well. Okay, so that's just a possibility. Pardon me while I wet my whistle. This gives you an idea of what's here. Now, what's important right now, right? Let's look at the right here and now. This is support. Let me turn the tag tool back on. But first, before I do that, notice these ranges, these really hard, clean edges of starts and stops. When we see that, that's an indication that it's one entity, one actor making this move, right? So you can see a clear line of orders faded from this range at mid upper 40s all the way down. And now you can see here where they pulled those orders and shifted and consolidated in this range right here. So now let's turn on the tag tool and see exactly what's here. We are currently trading at just under 42, and that was a bounce also, by the way, as we were in the low 41 range just really probably an hour ago. So we can expand on this even more if we want to make it easier to see what's here. And I'm going to zoom right in on this area. Okay. So we have just below us about 40 million, 40.67 million. Just below that, another 54 million, 54 and a half, another 40, another 17. I mean, there's significant support here. And it's laddered all the way down to actually beyond 30 into the sub 30 levels here. In my opinion, if they really thought we were going here, there would be, liquidity equals conviction, right? So this is where they think it is in the here and now today. This could change in the days or weeks to come, but that's where we sit right now. And that's, likely why we've bounced at this point. So now I want to zoom in a little bit and see if we can get a better sense of what's going on here. Yep. All right, you can see it on the monthly. You can see it on the weekly. And now let's go micro to the daily chart. All right, and you can see it looks like orders have been pulled, right? It's very clear. This is one actor that has pulled these orders right here. Now, did they market buy, or did they just pull the orders? My assumption is, and I really like to go with data more than assumptions. The mega whales look like they have started buying this range up here. Now, why would they buy here when there's so much liquidity down here? Well, there was this bit of liquidity here holding, and it's scaled here, right? So even without the tag tool, you can get an idea that yellow is around 8 million. But when you see this happening and there's resistance overhead, these guys are buying the liquidity without slippage, right? So they're dollar cost averaging a position most likely, and they're buying into that liquidity with precision amounts to avoid slippage. So they bought again, right? It dumped. They bought again. There's no way to tell for sure whether this is the same actor that bought here and bought here. If it was, this would be likely a dollar cost averaging move, right? Bought here, and I wouldn't be surprised if we see them buy all the way down here. Same thing when we get to this level right here, and let's see what is sitting overhead again. When we get to this level here, there's 7.5 million in the yellow at that point. I would not be surprised to see whales tapping into that liquidity. Are we going to have enough? Are we going to get to 43? And if we clear 43, can we get here? Or if you look at the start and stop of this, and this is another thing to look at here. See how this one stopped, and then suddenly all of this resistance shows up? These guys want to get filled down here. That's my take on it. I think these guys are trying to get filled in this range. And so they're trying to suppress price and get us to move back down into this range. This liquidity aims to get filled. That's the bottom line here. Is this liquidity aims to get filled. Over the past couple months, we've seen them have to adjust up a lot more so than down. And this could just be the correction where they're going to get filled lower. So, with what we're looking at in the order book right now, there's still another 9 million down at 38K. Again, as I mentioned earlier, sometimes we'll see the book overshoot. And so, we'll see price action overshoot the technicals. So you got to prepare for that. Prepare for that downside. You got to prepare for either scenario, really, when price action is like this. So now I want to show you one other new tool that might help you make some decisions as you're trying to strategize. I'm going to take you over to the MI dashboard, and this is a brand new tool. It also has not yet been released to the public. Our premium VIP subscribers have access to this. They're beta testing it for us at the moment. And again, thank you and welcome to all of the new VIPs who joined us over the holidays. It's really been amazing to get this kind of support, and really enjoying engaging with you all in the community. So this is an options flow chart, and whether you're an options trader or not, this should be interesting to you, because this data can give us some ideas of what the smart money is doing. This is kind of a compilation of calls and puts. If you're not familiar with options, I encourage you to educate yourself on that. The very basics of this would be that calls is more bullish and puts are more bearish. And in this case, since we have a cumulative here, we're going to say that puts equal negative calls, meaning the stuff above the price line being the blue line, black line being a VWAP. This up here would be call selling or put buying. Either of those are bearish. The red here, this is call buying at 50 and 53. Happy to see that there. Don't know if we get there before the end of this month. And down low here, these are puts. This light pink here, that's a call buy down low. Now we do have the ability to get more granular here and look at each type of option by expiry date and type. So this is for today's expiry, actually, and we're looking at calls, and we can see that there were some calls here at the 50 range and 52 range, and well, those guys didn't do so well, right? They wanted to see price above that. That didn't happen. Let's look out further and see what the end of the month looks like. So this is all calls. This is call selling. Okay, so these guys had calls in place and they sold them. They sold calls at 70. They sold 65. They sold 60. They pretty much sold almost everything. They're very low. So light calls, these would be call buys and just above neutral. So there's not a lot here from 30, 35, 40, and the range that we're in right now obviously also has been breached. Now let's look at puts. This is puts for the month. Puts for the month have now been bought. These guys are in the money. Okay, these were kind of neutral areas here, right? 50K. Well, this is an end of the month, so they're going to have to close at the end of the month. Let's first look here. Okay, so this was call buying in for today's expiry, and everybody from here down was in the money. We didn't tap 40K yet, so far, these guys, everybody below, not yet in the money. But let's look out towards the end of the month. This is the January 28th expiry. And you can see heavy call buying in the 35 to 40 to 45 range. So that's an indication, not a guarantee, but it's an indication that we could be seeing more downside. So even if we get a bounce today, by the end of the month, these guys have a feeling that we're going to revisit these lows. Now, this could change. This could change on a dime. These guys could sell these calls tomorrow or even today if we see a bounce. But this is just some additional information for you to be considering. And this, of course, is available with so much other data in the MI dashboard. The global analysis really offers a lot of tools, and one of the newest ones. Actually, before I do that, let's look at daily price change. This is also a good tool, and these red and green dots here are essentially buy and sell signals. And we can zoom here and see any asset that we want to see, just as we were able to do on the other chart, on FireCharts. We can zoom just by clicking the zoom tool, go down to the range of assets we want to take a look at, and see what's happening. Pretty cool. Pretty cool. One of the new tools that that actually just Fred just put in this week, and I haven't had a chance to really digest it yet, but I want to just give you a glimpse. This is really cool. This is a correlation plot correlating alts to BTC. And you can see when they're kind of decoupled, when that red line separates, when they're decoupled, what happens to price action. Let's see if I can make this bigger. And pardon me, I'm on my remote keyboard and it's a little clunky. There we go. Oh, not working for me because I'm on my little monitor. Sorry about that, guys. But you can see here, we can see this with some of these other moves. Look, when they're less correlated, we start to see bigger moves. When they're super correlated, we start to see alts moving. So just a couple of things to understand what is in the toolbox here. And we're going to do tutorials on all these things as soon as Fred finishes up dev and we finish all the look and feel of everything. We're going to do detailed tutorials on all these tools. So know that is all coming and on the way. All right, back to FireCharts. Let's do that. And now see if we can take a look at ETH. Looks like Bitcoin price action right now is nosing up to that 42,000 range. And that's, again, I want to take one more look at FireCharts and see if it looks like that's going to hold, or if whales are going to get in there and buy. Want to see some buying up here, right? So I guess that resistance is up at 42.5. We'll see what happens here. Keep an eye on that for sure. For sure. Let me just take a quick check and see if I got any questions in here again. Oh, let's see. Hey, thanks, Shield Cyber. Thanks, XBT3D. Happy New Year, my brother. Good to see you. I was worried about you. Hadn't heard from you a little bit, so I'm glad to see you here, man. Please post and talk about the Ask Bid chart. Well, I don't have the Ask Bid chart to share with you at the moment, but we can talk about that in the Telegram chat. Those aren't yet in the MI dashboard, but what he's referring to, what Shield Cybersecurity is referring to, is an Ask Bid chart that shows the range of asks and bids relative to price. And that's also one that is a good alpha to help us figure out when buying is going to begin. And again, let's do this. Let's shift gears and take a look at ETH. ETH I posted on Twitter yesterday that it had maintained the structure so far. It had lost the 200-day moving average. It had maintained the structure, but we had to be watching to see if that was indeed going to hold. Would it maintain the structure? If it didn't, it was going to retest some prior consolidation areas, and it did. You can see my box here. It's kind of a large range, but it literally wicked almost all the way through it. That goes down to $3,000 even. And what did we do so far today? We went to 31.95. And if we lose this level, we have, the next range to look down to is looks like about 2,800. So same thing, same set of circumstances here with trend precognition, right? The daily flashed us a short signal from the top of the trend line, and literally just about every time from the top of the trend line. And let's see if we got any confluence with the. So look at this. So here's a long signal that came from a retest of prior support down here. There's a long signal here, and there's confluence with the A1 long signal down here, this little green dot. So we had a nice uptick from that. Again, when you see these signals in confluence, or even a long, super long signal like this, it doesn't mean the move's going to be any bigger. It just means a higher probability of that move. And when the A1 and the A2 plus have confluence, that's when I have the most confidence in the move. And it's one that I play regularly. So, here we are. We lost the trend. I don't know what else you want to know. Let's look at it on the weekly. Again, similar to what we saw with Bitcoin, this has not printed yet. It won't print until after this current weekly candle prints. But let's look at the monthly. Monthly, didn't mean to take it off the screen. Monthly also printed after we closed that December candle. The monthly also printed a short signal, and that one is, as they say, already printed and in the books. Now, what's interesting here, I'm going to take it back down to a daily chart. What's interesting here, and we'll look at the FireCharts here in a second. What's interesting here is we know that a lot of coins have similar structures, at least alts, right? And so I've been tracking a couple others, BNB for one, which also was running in this channel, and up until today, maintained the structure. Today, it broke the channel. So expecting more downside here because it hasn't reclaimed that channel yet either. Solana is another one. Now, these structures were a little different, obviously. Actually, I probably could have drawn the same channel down this way. I'm a little bit more macro here, but same set of circumstances. I could draw a channel right there and see the same thing, I'm sure. In fact, I will clean up and let's hide that and hide that and add a channel here and see if it looks the same. Yeah, so we broke through the structure again. Same set of circumstances here. Solana has, for the moment, maintained that structure, but it's in a similar structure, and it also has almost touched that prior area of support, right? So that's another one to watch. Bottom line is in a market condition like we're in right now, this may not, and this is not financial advice, but just my own opinion, this may not be a great just blind buy the dip opportunity. Might be better, instead of BTFD, might be better to BTFB, buy the friggin' bounce. Okay, wait till you have confirmations that we're going to see a move here. And how do you get those confirmations? Well, We can use these tools. Obviously, trend precognition is a big help. It's a big indicator for things like that, as are FireCharts. So let's look at some of these things. First, let's go to ETH because that's where we started. And by the way, FireCharts currently supporting all BTC and USDT coin pairs on Binance. We are expanding to other exchanges, but we've got to make some changes to the infrastructure to do that. And that stuff is being architected as we speak. ETH, USDT. So let's go to a 3-year and see what we have here. Now, the BTC book is the deepest. So it takes a few seconds to load it for the first time. Once it's loaded, once you load a chart for the first time, everybody in the network will have it much faster. So it's trying to now load 3 years of data. So that takes a few seconds. But we're going to get a snapshot of what's there. You see right now, most significant support is in that $3,000 range. So, this looks difficult to gain anything from. Trust me, it's not. I'm going to show you how we use this data. Even though this book isn't as deep, we're basically looking at the 5,000 orders nearest price action. And I'm just going to go to about here. All right, so we can see obviously the most support. There's about 20 million here in the 3,000 range. But let's use the CVD to our advantage and see if we can understand what's happening. Obviously, distribution happened here. Got the bounce, distribution there, and now we have what seems to be mega whales still buying, at least on the macro view, near all-time highs, and distribution happening in other phases. This is bots here at this point. Let's zoom into this a little bit more. Actually, first let me bring in some of these other classes and see if that changes the tune. All right, so overall CVD is down. Looks like mega whales and these bots have been in accumulation mode for the most part. So let's now zoom into this a little bit and take this down to daily. Okay, so we're right here in a range that is been resistance at 3,200. Price is right here up on this right now as we speak at 31.99. It looks like. So you can see confluence with what we just said, that mega whales were accumulating in this range and they're buying right now, trying to buy through this. If they buy through this, does that mean that ETH is going to moon now? I'd be real surprised. But look, we also have other classes that are buying, and this is probably largely a mix of retail in these two classes. But there is buying there, and that's good to see. The support sits here at 3,000 even, and there's 11 million in support sitting there with some front runner liquidity up here. Well, guys, with that, my phone is blown up right here from my family. So that probably means that something significant is going on that I need to give my attention to. I appreciate you giving me the time. And again, I will be in the Telegram group here, sharing more ideas and more data with you. In the meantime, if you want to, join our community, I invite you to do so. If you can't write down this link right here, you can do so on. You can just copy it off of our Twitter feed. And if you like the content, please do me a favor, like, comment, and subscribe. And one more reminder, of course, none of this has been financial advice. So please consult your favorite financial professional to find out more about what you should be doing to prepare yourself for what's happening in the market. My name's Keith Allen. Thanks again for joining us. You can get more at materialindicators.com.